What if one of the world's most iconic sports car brands posted a 64% drop in deliveries and somehow still called it a turning point? That's exactly what happened at Lotus Technology, and the story behind those numbers is a whole lot more interesting than the headline. Stick around because we're counting down the 10 biggest takeaways from Lotus Tech's Q4 and full year 2025 earnings call, and number 1 might genuinely surprise you. Coming in at number 10, Lotus saw a steep drop in deliveries. Total deliveries for fiscal year 2025 came in at just 6,120 units, a 64% decline year-over-year. Management pointed to a perfect storm. Tariff uncertainty disrupted production and inventory management, new model transitions created logistical delays, and intensifying competition in key markets all played a role. Not a pretty number, but context matters here, and we'll get to why in a moment. At number 9, despite those falling volumes, gross margins made a meaningful turn for the better. Full-year gross margin improved from 3% in 2024 all the way to 9% in 2025, with the fourth quarter alone hitting 10%. The company credits this to clearing out aged inventory in the first half of the year, a better sales mix in the second half, reduced variable subsidies, and tighter procurement discipline. That's a real structural improvement, not a one-time blip. Number 8 is all about cost discipline. Lotus slashed operating expenses across the board. R&D spending dropped from $275 million to $171 million. Sales and marketing fell from $322 million to $153 million. And G&A came down from $227 million to $136 million. Importantly, management stressed these aren't temporary cuts. They reflect a restructured organization built to run leaner long-term. At number 7, the bottom line improved dramatically. Operating loss narrowed by 46% year-over-year, and net loss fell 58%. On an adjusted basis, EBITDA loss improved by 63%, coming in at negative $356 million compared to negative $961 million in 2024. The company is still losing money, but the trajectory is clearly moving in the right direction. Number 6 is a standout story within the story: services revenue. While vehicle sales fell, service revenue, driven largely by R&D licensing to major OEMs, surged 69% year-over-year to $36 million. R&D services alone accounted for over 75% of that total, showing that Lotus's intellectual property is genuinely valued in the broader automotive industry. At number 5, China proved to be a bright spot. In a luxury vehicle segment priced above 400,000 renminbi that contracted 4.4% overall in 2025, Lotus actually grew its China deliveries by 3% year-over-year. That's a meaningful signal of brand strength and product competitiveness in the world's largest auto market, and gives the company a real foundation heading into 2026. Number 4 brings some geopolitical good news. The US and UK reached a trade agreement setting auto import tariffs at just 10%, which has already helped Lotus recover Emira sales in the American market. Even more significantly, Canada slashed its tariff on Chinese-made EVs from 100% all the way down to 6.1%, a game-changer for Lotus's North American expansion, where the Electra is already fully certified. At number 3, Lotus scored a major technology validation. Its Electra SUV became the first, and currently only, Chinese-made electric vehicle to earn UN R171.01 certification for highway navigation systems, making Lotus just the second automaker in the world to achieve this milestone. That certification opens premium doors in Europe and reinforces the credibility of Lotus's advanced driver assistance technology. Number 2 is the launch everyone's been waiting for. On March 29, 2026, just weeks ago, Lotus launched the For Me, its first hybrid model in 78 years. It runs on a 900-volt platform with 952 horsepower, achieves over 1,400 kilometers of combined range, and hits 0 to 100 kilometers per hour in just 3.3 seconds. Post-launch consumer interest reportedly jumped 5x, and the model ranked in the top 20 for vehicle consultations on major Chinese platforms almost immediately. And the number 1 takeaway, 2026 is shaping up to be Lotus's recovery year. With the PHEV rollout expanding globally in the second half of the year, inventory now at healthy levels after a 43% reduction, tariff headwinds easing in key markets, and new regions like Canada and Brazil coming online, management expressed genuine confidence that this is the year the company turns the corner. The strategic reset of 2025 was painful, but it may have been exactly what Lotus needed to set up a sustainable path toward profitability. That's your top 10 from the Lotus Technology Q4 and full year 2025 earnings call. If you found this breakdown helpful, hit that like button and subscribe for more earnings recaps like this one.